Hi guys, and welcome back to another Hampton Roads edition of the Ginger Realtor. With me today is Eric Kline from Southern Trust Mortgage. Eric, thank you very much for your time.
Appreciate you having me.
Eric, I want to just jump straight in right now. We'll do the Mortgage Mondays, and you're going to be a recurring guest for me down here in the Hampton Roads area. So let's just jump straight in. Why should a buyer get pre-approved before they start shopping?
In today's market with the limited inventory, it's almost pointless to even go to look at a home without a pre-approval letter. The realtors, the listing agents, not even going to take you seriously. The selling agent's not going to care. It's just pointless to even contact a realtor to go look at houses without one. You're going to have 50 offers on a house, and they're not going to take your offer without a pre-approval letter.
Now, I'm sure you've heard those sort of same words echoed by realtors around the Hampton Roads area. Heck, it's the same up in New Jersey where I initially started. Question for you, Eric, and this wasn't planned before we started. Do you do pre-underwritten mortgages so that they just have to find a house so that they can close quicker?
I do. That's actually one of the perks we're doing right now. We actually have a process where we have priority approval, where I send you to be determined on your property address. I collect all the information and I get you pre-qualified. You've already been through underwriting. We already know everything, all the problems that's going to arise. We've already taken care of them. That way we can get you in a quick to close mortgage if you're in that type of competitive situation.
So effectively with that kind of mortgage, you're almost as competitive as cash right there.
It is. We are ready to go. Usually I attach my cell phone number to give to the listing agent. And if they call me, I can pretty much guarantee them, you want to close? What do you need, 10 days? Let's just get this off the books right now.
Okay, so for anybody who's lost out on multiple multi-bid situations, and it's been because either your offer hasn't been cash or you're not flexible enough on close dates, Eric, with a pre-underwritten loan approval, can get you closed in 10, 14 days. And that's a huge advantage in this market right now, where we're seeing 10, 15 offers on a house that probably doesn't warrant the price. But if you can close quicker and you can turn it around and give less stress to the seller, then it definitely puts you well in advance of the competition. And I'll put all of Eric's contact information down there. I think it is, or down there, depends on where I edit him.
It'll be somewhere.
So Eric, let's talk about the mortgage industry right now. Obviously, there's been some significant jumps in interest rates since the start of the year. Where do you see things right now?
I don't think we're going to go above a 5. I think when people hear 5, that's worst case scenario. I personally don't think it's going to happen. You know, around here in Hampton Roads, VA, veterans, active duty, huge loans right now. You could still expect like 3.5%. You know, you might get a 4%. Again, so many variables. You know, what's your credit score? How much money you have in the bank? You know, history of payments, et cetera, et cetera. But good credit score VA, you know, you should still be 3.5s. Investment properties, second homes, you might be in the 4s. FHA, depending on the type of program. Again, high 3s. Conventional, again, high 3s, low 4s. Again, all depends on your credit scores.
And how about jumbo? Do you do a lot of jumbo down here?
We do some jumbo. Now, jumbo, you're getting into a completely different category. You know, as much as I hate to say it because it scares everyone, I'm going to say it anyway. ARMs. You know, it was a thing of the past in the early 2000s. It was used incorrectly. The industry has been completely regulated since then. Obama took care of that. So I'm just going to say it again. ARMs will get you a lower rate right now. We got some great 10-1 ARMs right now and some jumbo products where I think we had low 3s, and I think we even had a lock in high 2s not but a week ago. So
for
those are products. So
for those people out there who aren't familiar with an ARM, obviously I don't want to take too much of your time up today, but just in like a 30, 60 second idiot's guide, explain what an ARM is and how it should work.
All right, an ARM, adjustable rate mortgage, right? So say I want to get a good product right now is a 10-1 ARM. So you're going to go 10 years right now at a lower interest rate than what the market has. All right, so for those 10 years, you're going to be living life. You're going to hopefully in 10 more years be at a better place financially, whatever the case may be. But on that 10th year, your mortgage rate will adjust. All right, it's allowed to adjust one time per year. Now we have a whole bunch of different indexes and margins. I could just school you on a whole bunch of numbers here, but the bottom line is it's going to jump, it could be as high as, depend on your arm, as high as 4%, or if the market's even better, it could possibly even lower. It's sort of a gamble you're taking it, but most people, when you're in an arm of long-term nature than that, around 7 or 8 years, you'll look to refinance, maybe get into a 15-year or 30-year, lower your payments a little. But the arm is the way to go right now as far as jumbo mortgages and keeping it.
Now, while we're obviously doing, I don't want to call it a dummies guide, but a very basic information. So for that first 10-year period of ownership, the rate doesn't change.
Does not change at all. So if I lock in today and I have a great 10-1 arm on my jumbo product, say it's 2.875, that 2.875 will be good for 10 years. So
I think that's an important thing for a lot of people to look at, because we know the horror stories of how arms went. People were refinancing their on an arm, and then they were hit with the balloon payment at the end, and they just weren't ready for it. And that's kind of what triggered a lot of the issues we had when people started betting against the mortgage industry. So I think if you know how to budget your money and you know what you're doing, and let's be honest, in the Hampton Roads area, most people aren't in their homes for more than 5 to 7 years. So especially if you're here with the military, you do your service, you buy your home so that you're not on military housing, and you're gone within 3, 5, 7 years. You've been able to lock in your home at a 2.8, 2.7% rate. You've been able to make your money on the home, and you've never really been crippled with a higher rate, a 3.5, a 4, 4.5, maybe even a 5, depending on where things are going. So I think it is a really good product to look at, but I think you also have to be fully aware of how that thing changes if you are there long term.
Right. There's one big, huge difference between those arms of 2004 to 2009 and the ones we're offering today. Back then, there was no income, there was no documentation. You could literally apply for a loan and get it. You didn't have to show that you made money. It was very simple. So they're dishing out these arms. So they're only 1 year. So like, oh, the first year, that great introductory payment. But then after that first year of the 1.5, it would automatically jump to the today's payment of 5% plus whatever interest and blah, blah. They weren't prepared for their mortgage to almost double. And they were more 1 year arms, and now they're 10-year with minimal adjustments. So it's a same product name, but completely refinished.
So Eric, if somebody wanted to reach out to you and discuss an arm as their mortgage of choice, how was the best way for them to do that?
Honestly, I would just say text me or call me. I always answer my phone, unfortunately. Bad habit, girlfriend hates it.
So one of the things we'll do is we'll make sure that Eric's information is below him on the screen, so you'll be able to write that down. We'll have his email address and his direct cell phone number, so you can reach out to him. Eric, thank you very much for coming on the Ginger Realtor Show today. We look forward to having you back on a regular basis.
Gavin, it's my pleasure. I'm looking forward to it every other Monday, brother.
There we are. Okay, guys, that's all we have time for today on the Ginger Realtor Show Hampton Roads edition. If you're bored and really want to take a look at some other content, we have a New Jersey edition of this as well. We have a team up in New Jersey working really hard in that market. But for this week, thank you very much for the spotlight on Mortgage Mondays, and we'll see you all next week.
All right. Have a great one. Thanks, Gavin.